sure. You can't start the story of Sanlam without talking about our 100-year history. So we've just turned 100. We're 101 month old now, which is formidable. For any institution to get to 100 years, I think is a commendable milestone, and I think especially in Africa, for the institution to have really come through the last 100 years so successfully in its business strategy at home in South Africa, and then obviously the expansion to the rest of the continent. So Sanlam Africa Investments was born out of that expansion. The group has spent the last 20 years expanding into the rest of Africa from its base in Cape Town in South Africa. We now have a footprint across 34 countries, and it's real tangible presence. So it's not rep offices and sort of small sort of postage or post boxes. It's real substantial operations, very senior executives who are well plugged into their networks across those different countries. And Sanlam Africa Investments was built on the back of the excellent reputation Sanlam has had for investment into the rest of the continent. We were tasked with going to go and find all the portfolio managers across the group that invest into the rest of Africa. And obviously in a big corporate they were sitting all over the place. So we pulled them all together into one business. And as we always said, the strategy there was to get everyone around the same water cooler. In a continent where information is so asymmetrical, we saw tremendous benefit in everyone being able to share feedback from their different trips, feedback from interactions with different industries, different management teams in those industries from different economies. And that was really how we pulled Sanlam Africa Investments together. So our goal is to become synonymous with investment into Africa. We've on the back of the group strategy, we've seen a tremendous opportunity. We've had third parties approaching us, identifying the African growth story and all the different components of that growth story: the consumer, urbanization, big infrastructure builds, tech frog leaps, the excellent resources that Africa has, and haven't been able to access it in kind of a risk mitigated way. So the group had a couple of approaches, and we're exploring those now, of people who were keen to harness that African growth story, and wanted a safe pair of hands, excuse the hopeless reference to our logo, to hold their hand into the continent. Okay, so when we started looking around the group as to what we had, we found that I guess it was already known, but we found that we had a public equities offering, benchmark cognizant public equities offering, and that was set up in 2010. There was also a fairly new real estate offering, domiciled out of Mauritius, that was set up in 2013, listed on the Mauritian Stock Exchange. And then most recent of the portfolio, or the funds that was set up, was a credit fund, which had been set up in 2014. Once we started looking at those capabilities, and obviously we then try to work out which of them was most appetizing to third parties, which of them needed to be tweaked a bit, and we spent quite a bit of time doing that. The one thing that we identified was that a non-benchmark cognizant, really sort of unconstrained, if you will, public equities portfolio or capability was required. So we spent some time putting that together, and that was launched. It's just turned 3, which has gone 3 years now, and it's been performing exceptionally. So kind of proof was in the pudding, or we had the courage of our convictions, and they've been proven correct, which is great. We've got an excellent fund management team there in Pete Townsend and Addington Jedahuni, and they are really best of breed. They were 52% of return, 31% of that was alpha over 2017 in that particular fund. The other fund has also done exceptionally well. Don't get me wrong, but that one in particular is really how we see the best manner in which to go and explore investment into the public equity markets of Africa. So that was the additional fund that we added. The empty boxes for us are African private equity. So we have South African private equity, and we're looking to roll out African private equity and infrastructure as well. We have infrastructure capability, but not for third parties. So it's managing balance sheets money, largely into South Africa, but with a mandate to go into the rest of the continent. And the group also has an excellent joint venture with FMO, the Dutch DFI, and a group of guys called InfraWorks. So really strong track records of investing into infrastructure across the continent. Their mandate is slightly broader than just Africa, but quite a big chunk of what they do is in Africa. So that's that's a way of us. That's the way in which we can express an African infrastructure. We take our responsibility of being the custodians of other people's money extremely seriously. And that's sort of, I guess, the beginning part of Wealthsmiths. I mean, I know it's written down here, and Sanlam's purpose, as stated, is to create a world worth living in and to enable people to live their best possible lives within that world. And that, for me, encapsulates the concept of a wealthsmith. It's a fiduciary role of care, of responsibility, and of extremely prudent and diligent management of other people's money. We've always thought, and really the genesis for my involvement in Sanlam Africa Investments was a wall of money that was looking to place itself in one of the categories in private equity. And that's why we started looking at other capabilities, because to try and house a big chunk of change into just private equity in Africa would have taken a really long time. Alternatively, you would have paid way multiples that were way too high, because you would need to go and compete with all the big names, fighting for the other big names. And so in that process, we clearly identified that a multi-strategy approach across all the different capabilities is the most appropriate way of harnessing the African growth story. The reason I say that is, if you look at the stock exchanges across Africa, and you sort of look at the segmentation across those stock exchanges, it's not a great reflection of what the GDPs of the different economies looks like. So our view is the growth all lies in the GDP, and if you want to go and capture all the growth in that GDP, you need something beyond public markets. So you need to go and look at all the different asset classes. And that's the way we'd like to express, or we'd like to take our clients and provide solutions to our clients for investment into the rest of the continent. And that's why we've got the building blocks we've got so far, and we'll look to add other building blocks as we go along to provide a geographically diversified, asset class diversified, kind of risk mitigating, responsible way of harnessing the growth prospects of Africa. The group takes its responsibility as the largest non-banking financial institution on the continent, and with that comes tremendous responsibility. So, deepening capital markets of Africa, improving financial inclusion of the population of Africa is extremely important. Obviously most of our operations are still based out of South Africa, but that in itself requires a stronger African continent for SA, and for the rest of the operations, of course, across the continent. So we've seen that as a sort of central drive to have a stronger consumer at the end of the capital we're deploying into the rest of the continent. It's just better business for Sanlam. To have a stronger bunch of SMEs at the end of the capital chain is just better for Sanlam. Someone who's got a bit more space in their wallet for savings, for funeral planning, for their pension, for life insurance, for investments, is a better environment or ecosystem for the group to operate in. One of our funds in particular has got that as a quite a central key or factor into their investments, which is our credit fund. So they're looking at investing into private debt, and they're targeting the kind of the unbanked middle. These smaller companies and consumers are able to borrow, but at predatory rates, rates that would make your eyes water. So we're looking to lend to them at responsible sort of borrowing rates and interest levels. So credit, absolutely. I think globally, there's far more interest in credit as regulation has come in. The banks have gone through their regulatory wave. The insurers have Solvency II coming through, and obviously sort of implementing that and re-looking at their balance sheets and which assets are most appropriate for them to hold. You can imagine, particularly with life insurers, where there are these long-dated liabilities, the ability to be more confident in the long-dated returns or longer-dated returns that you can receive out out of the asset classes is more attractive. So it's absolutely been a move towards credit, and we've certainly seen that from within our own house. We're not beholden to Sanlam. We obviously have seed capital from Sanlam, but we'll take a lead. There's some very clever actuaries there taking a look at the globe and where the appetite has been highest. So credit certainly. So private equity for me, and I think also for our house, there are a couple of question marks. There's still the need for a fully invested, fully exited, a few vintages to come through for people to really gain confidence in what private equity is able to do. Again, I'm slightly concerned that there was quite a bit of money chasing what was perceived to be a broad market that ended up being quite a narrow market. That obviously drove the prices up. So the multiples going in, I think, were quite high for quite a few private equity investors. However, there are some fantastic private equity opportunities. The sort of word to the wise, I guess, is that they take much longer than they would, I guess, in the developed markets to implement. You're really going and trying to convince family-owned businesses to allow you to co-parent their child almost. So it's all about partnership. It's all about building a really strong relationship, or a sincere relationship of trust with your investee companies. Because by the time, the good news there, I guess, is that by the time you do get in, there's less kind of finding each other out and feeling each other out. You're far more vested in their lives, and as are they in understanding how you invest, what goals you'd like to achieve with the company, what sort of strategies you'd like to explore alongside them. So the partnership model is critical to private equity in Africa. It just takes a long time. Maybe if I can add there as well that I really do think the way Sanlam for itself, so it's not on a 10-year +1 horizon. Granted, these are strategic acquisitions, but they're private equity acquisitions. And the way in which they've gone about private equity, to me, is commendable. So they've acquired small minority stakes. Well, first they've taken a real long time to vet their partners. Once they're comfortable with that partner, they've taken minority stakes, gotten seats on the board, and really listened to how the investee companies operate and seen where they could possibly add value. As they've gotten more confident in that relationship, they've gradually increased their stakes. And the greatest example is the most recent Saham Finance transaction, where we took minority stakes, we increased that stake, and we eventually acquired one. We took the minorities out and acquired 100%. It's counterintuitive for a private equity though, because you're paying at each of the extra tranches for value that you've created, but the amount of risk you've mitigated in that process is far outweighs what you may have had to pay or give away a little bit in further tranches. So I think it's a very strong model for investment into the private markets of Africa. It's premised on the basic fundamentals of capitalism. So capitalism, which is the world that we all live in and work in. Tongue in cheek, who knows? Maybe the millennials will change that, possibly. But for now, the world of capitalism really requires growth. So it depends on, figuratively, more mouths requiring more things to feed themselves. And in a developed market where that isn't the case, where growth has really come off, not just population growth, but all forms of growth that has come off. And Africa is still showing excellent growth prospects. It's one of the few remaining places, I think, where capital can be best deployed to go and drive and enable those growth prospects. So for me, there's tremendous benefit in that, as well as, and I really do believe this, as capitalists, our job is to make sure that the capital is applied to where it's best suited. And I believe that Africa certainly is a good destination for capital. You can have extremely high impact with your capital. There are attractive returns, and the growth prospects are tantalizing. So as I mentioned, there are some empty boxes. We'll look to add private equity. We'll look to add infrastructure, Africa-focused third-party access infrastructure, and we're resolutely focused on providing the multi-strategy capability for all the right sort of risk-mitigated, return-attractive reasons. That may mean also, by the way, that we could look at a bond fund. So there's excellent liquidity in the bond funds, and as part of a multi-strat capability to solve for the liquidity, as you're moving capital between the different strategies, a bond fund may well be part of our future. I quite like the ability to do joint ventures in country, particularly in private markets where the management is a bit more active. So we'd look, maybe on infrastructure, private equity, and even private debt at looking at joint ventures in country. The great news is that across our 34 country footprints, we have asset management in six of those countries, and certain of those asset managers have got private equity aspirations. So there's excellent opportunity and prospects for for us to go and set up a joint venture in country where the teams in country will source, vet, monitor, manage the different private equity opportunities, leveraging off the private equity machine and back office support and middle office support that we have back home in South Africa, and governance as well. So those extra capabilities are exciting opportunities for us to pursue going forward.